Hey guys, Brock Chapman, associate broker with Signature Home Sales. This is the very first episode of Find Me the Money Friday, where I interview loan officers, hard money lenders, mortgage brokers. So that way, when you go to buy a home, you've got a library and a resource that you can access to find out who the lender is, what programs they offer, and what makes them different. I want everyone to welcome Melanie Meyers with Woodsboro Bank to the show. Thank you so much for being here, Melanie.
Thank you for having me. I'm excited to be here.
I'm glad to have you. So before we get into the details about your company, tell everyone about yourself, how you got into the mortgage business, and how long you've been doing this.
I started in the business 20 years ago. Right out of school, I was exploring different options within financial industry, and I decided that working with people, helping them to achieve the dream of home ownership was exactly where I wanted to be. So I've been here pretty much right out of school, and I started as an underwriter, and I did that for the first half of my career and then transitioned to the other side where I can help clients directly.
Gotcha. So 10 years of underwriting and 10 years of loan origination. Did I get that right?
That's correct.
Gotcha. Cool, cool. So one thing that I always like to go in with every lender, because a lot of prospective home buyers out there don't really think about this, the role that the Federal Reserve plays, politics, the world economy, and the Fed funds rate. Tell us about your experience over the past 20 years about how the federal funds rate, politics, and the global economy affects the real estate market and interest rates.
Well, I think oftentimes we see headlines come up when the rates go up or down, and people start to frantic if they're go frantic if they start to go up, or they, start calling in about refinancing the second that they hear that they drop. And so that market rate that the Fed controls only controls the Fed rate that affects the amount of money that, or how much money the borrowers are going to get, or the banks are going to get from for the mortgages they're giving out. So it's basically how much it's going to cost the bank to borrow the money. It doesn't necessarily directly impact a rate. So when you hear a 0.25% reduction in the rate from the Federal Reserve, it doesn't mean that automatically all of the rate sheets for every mortgage that you were offered yesterday are going to be dropping by 0.25%.
Gotcha.
Those rates really affect short term. So home equity lines, anything with the variable rate, car loans, and credit cards. It does impact how much it costs banks to borrow money. So that cost, of course, can be impacted to the client. So if it costs a bank more money to get the money in order to give people access to mortgages, then it will typically translate back to the client one way or the other. So if the rates drop, then the cost usually reduced. If the rates go up, the cost increases.
Understood. So you're doing your own research every day. Just because you're in the business. For agents like me and other folks out there in the general public, what do you recommend we check out or follow to stay on top of what's being impacted with politics and how it affects interest rates? How can we kind of be someone like you and more or less try to forecast, or can we forecast, what's going on in the mortgage rate market?
So the rates drastically impact the client's margin of affordability. So if the rates swing and they go up 0.25% or 0.5 point, and someone is looking at the top end of their price point that they can qualify for, that's when they're going to have to be pretty aggressive when they're trying to get in the market when the rates drop. In the beginning of September, we saw the lowest rates that we'd seen since 2016, and by the end of the month, the rates had inched up. The clients that were in the $500,000 range were seeing a difference in payment that would cost them, a difference between maybe $150 difference by the end of the month. So those same clients that were looking at those houses for $500,000 may have only been able to afford a house that was $475 by the end of the month, just from that little bit of a variance in that rate. So that's how it impacts the client. I like to work with clients and give them realistic expectations. And when I qualify them, I give them a higher rate than what the current market rate is today and base it off of a projected increase in the event that there are swings and fluctuations in the market.
Right. That way you've got some wiggle room if things change. Makes sense.
And they're not falling in love with a property and then having their heart broken because the rates have changed from, the 2-week period that they've been shopping,
Right.
because that's the worst way to have your home buying process start.
It's almost like you've already baked in margin for error pretty much, or market fluctuation. So you mentioned that rates are at all-time lows. Tell me how that's impacting our market today. Are you seeing a ton of influx in buyers taking advantage of these all-time low rates, or what's your perspective on that?
Well, I'm actually seeing a lot of clients come back to refinance, because even clients that we were able to help a year ago, their rates are almost a percentage point lower in some cases. So it's worth them, considering a refinance. As far as with the purchase market, um, obviously the more that someone can afford, the more realistic it is for them to make that a reality. Or if people are in their first home and they want to move to their forever home, they can afford more, they can meet more of the things that are on their checklist. So we are dealing with a shortage of inventory on the market for a lot of the clients that are in the market right now. So I mean, it is a busy time on both ends for the mortgage aspect, from both refinances and purchases.
I couldn't agree with you more. My sweet spot for my clients are buyers anywhere from the $200,000 to $400,000 price point, and you're talking, your typical Rambler style homes. I mean, here in Frederick, I mean, I helped a buddy with one back in 2016, and he paid 210 or 215 for it. Now that same single family house is, almost pushing 300. So it's crazy how fast the markets can change when the interest rates go low, and we'll just say your I don't want to say average, but your typical family of, your married couple, or your starter family with maybe one kid and another one on the way. This is where they start. They start out in a townhome or a small single family, and it's pushing prices up. And it's just really nice that money's cheap enough now to where they can be able to afford that. So I want to get more into what type of loan products you offer, what type of loan products do you not offer. Give us the general spread of what Woodsboro Bank can offer everyone.
Well, Woodsboro is unique in comparison to a lot of other banks in the area. We're a local bank that's been serving the community for 120 years. We, for our history, have offered construction loans and lot loans, and more recently, in the last 12 months, have made the transition to offer other products to our clients, including FHA, USDA, VA. We offer any conventional product that's available, but we also are able to offer our portfolio package. And our portfolio package goes anywhere from a lot loan, which is hard to find nowadays, and our construction perm product, which is a one-time closing. And a client can go up to 90% financing on that, and they close one time and can begin building in their home. And at the end, they don't have to pay additional costs for a closing, and they're locked in at an interest rate at the beginning of construction, versus taking a gamble and waiting for it to be done and then having to convert that financing into permanent. Another great thing about Woodsboro is everything is done here in-house in Woodsboro. We serve the community here in Frederick County. So we don't have to send decisions to North Carolina or Pittsburgh or California. Our decisions are made here in Frederick County, where it affects our client.
Gotcha. So it's funny you mentioned those two programs, the lot purchase program and what was it, a 90% one-time closing loan?
It's a
So,
construction, yeah.
okay. That was the next question I was going to ask you, is what are the special, well, you already answered my question. What special loan products do you have that you find that most other lenders can't do that you guys pretty much specialize in? Like what's your niche? What do you find on your plate that other lenders weren't able to do, that you guys were able to pick the ball up for them and get these folks a lot or a house or new construction? That you want to give any more information on those two programs, or something else you could do is send me a file or a photo of them, and I'll put it in the video for us so the viewers can see the details about the program, the requirements, and all that good stuff.
Yeah, I definitely can send that over. We offer in-house underwriting here, and with our portfolio, package, we can look at things a little bit differently than the standard black and white guidelines that some of the other programs have. If it makes sense and it doesn't present unnecessary risk for our shareholders, and our underwriters agree that it's a good financial decision, sometimes we can make decisions on loans that other companies can't, just based on our portfolio option, the fact that everything's kept in-house here and not necessarily something that has to be sold on the secondary market.
Gotcha. So to put that into perspective for people that haven't gotten a mortgage before, uh, when you have everything in-house, you don't have to call someone, like you said, in another state or another part of the country. It's almost like keeping it within the family. You can go talk to someone that you already know, that you work with every day. There's not a completely different department that you have to go to ask permission. And it's communication's everything in life, right? So being able to have in-house underwriting seems to be almost like what's becoming a new level of a standard in the mortgage industry, when, it's like real estate, everything's so competitive, right? So the more that you can streamline the process for the customer, the easier it's going to go for them.
Yeah, and the great thing about having everything done in-house here and being in the county and community that we serve, someone that's underwriting a file for a different company, let's just say another big bank, that the underwriters could be in North Carolina. Those underwriters have no idea what the difference is between Frederick City, Frederick County, comparing a property from Boonesboro to Middletown. They don't understand the difference of the neighborhoods, where everyone that's here understands the neighborhoods because we live in them. We understand, the job forces, the property values, the things that are happening, downtown, all of these things that affect our clients and the growth of our area. We understand that we're a suburb for two of the largest, Baltimore and DC, which, make it a great place to want to lend money to clients because we have a strong economy here. Or someone that's sitting at a desk at Pittsburgh or North Carolina or Florida, they don't necessarily understand, what comps should be used or how the difference in values should be approached. So it does definitely helps our clients with us having local service right here in this office.
Amen. We're a local company as well, and we can very much attest to local knowledge is key, just like the Baltimore market. I mean, the difference from Baltimore to DC to where we're at in Frederick and Woodsboro, I mean, all these different places have their own nuances and things that you really want to know if you're going to be servicing your clients at the highest level. So
Exactly.
a lot of lenders, mortgage brokers, they have similar loan products, right? They all offer, not everything's the same, right? So why choose Melanie Meyer at Woodsboro Bank over all these other mortgage lenders and brokers out there?
Well, with our bank here at Woodsboro, we've been serving the community for 120 years. You don't get an opportunity to do that just because you're in it because the rates are low. We were able to maintain that history because we take care of our clients, and we continue that through our mortgage process. We're one-on-one, come to see us face-to-face, have a consultation. We're available whenever our clients are available. Even though we work for a bank, we work outside of those hours to be accommodating for what people need. And with my 20 years of experience, especially with the first half of it being an underwriter, I provide a unique level of service because I have a higher level of understanding for documents than a lot of the other peers out there that have only been on the front end things. So I can kind of look at things and eyeball and kind of gauge what may come up as a hurdle or prepare the client for documentation that they're going to need to provide, so it's not as much of a headache. I think one of the major complaints that most people will say during the mortgage process, now that the regulations have changed so much, is the amount of times that a client is contacted for paperwork. So
Oh my God, it's horrible. And agents hate it too, because when you're dealing with the loan officer, you're dealing with the person that's selling the product. So they're yes, yes, yes. And the underwriter is almost always the no, no, no. Right. So the fact that you've done both, that's really awesome, that it's almost like you can see into the future in a way to say, like, let's address this right now, because 30 days when we're trying to close and the underwriter's reviewing the file, you've already done that and nipped the problem in the butt. So that's awesome. That is a great unique selling proposition for you as an individual.
And it definitely has helped. And I'm going to say that, there's still going to be times where the client feels like we're asking for everything, including their blood type, to deliver a mortgage. And I know just the transition from the last 20 years, how the process and documentation has increased. And unfortunately, I don't think that that's really going to be minimizing anytime soon. But that's all in all to protect the economy and to make sure that we don't fall back into another cycle where people are getting mortgages that aren't qualified for them. And through that, if we can anticipate any additional delays or documents that we could have maybe began to prepare for in the beginning, then the process is just smoother for the client. Ultimately, that's what we want. We want a client who's already stressed out enough with the whole moving process to be able to go under contract and know with confidence that we're going to be able to deliver on that. And the thing that they can need to worry about is switching cable and packing boxes, not necessarily, am I even going to make it to the closing table?
Gotcha. Why is it, do you think that some lenders are sometimes asking clients for the same documents over and over? Did they not file them correctly the first time? Do they want to see updated bank statements? And like, I mean, it's not like unless you redid your taxes and whatnot that things would change. So in your experience, why do you think that sometimes lenders are asking buyers for the same stuff multiple times?
I think we can run into situations if documents expire because they all have a time frame. Sometimes underwriters perceive things differently than the loan officer and the borrower. And we have to remember that the underwriters don't have conversations with the people that are buying houses. So if the loan officer doesn't do a good job documenting and helping paint the picture of everything that's going on, the first time the underwriter looks at everything, then they start to ask questions on their own or ask for documents that may not even be necessary, but they just don't have all the puzzle pieces together because they're not the ones that are sitting across the desk from the client. That's the loan officer's job.
Right.
So I think a lot of it can be nipped in the bud if the loan officer does a better job on the front end, but then sometimes some things come up with an appraisal or title that can't be controlled. Or if a client makes any changes to their income, or if there's a question with the way something is verified, then that could, create a problem, or, maybe just some questions that they want to have asked.
Yeah.
Or,
It's funny you mentioned that because sometimes people ask me questions about real estate or about a particular deal. And one thing that I've just kept into the back of my mind as a real estate broker is that there's a million things that can go wrong with a real estate transaction at pretty much any given time. Someone can lose their job. They could have some sort of relationship problems, illness, health. I mean, like, there's an infinite amount of things, like you said, anything with the inspection, the appraisal. It's like there's so many unknowns and variables to a real estate deal, which is why it's really important to have trusted advisors like a good real estate agent, a good mortgage officer that really knows what they're doing so they can hold their hand and walk them through the process. So the next question that I want to ask you is about fees. So I'll never forget, I met with a builder. I was doing a price out for a client of mine, and there was a $500 doc prep fee and a $500 underwriting fee. And my buddy's numbers were tight, and then all of a sudden they just waived them, and I was like, "Wow, that's sounded like they were having like this $1,000 pocket padding cushion. Is that something that you guys charge?" And I'm not saying that people charge them are bad. It's just I'm trying to learn for myself and for my clients why these fees exist. What do they provide to the client? Do you guys charge them? And I'll let you answer. So I'm basically asking, like, what are your fees and what do
so,
they get?
I mean, being a local community bank, with our goal of serving our community and our clients, we keep our cost as low as we possibly can for our clients. And I would think the more important thing for a borrower to consider when they're looking at a mortgage lender for their option for financing is, in addition to the fees, what the rate is. Because the fees are set in place so that we can cover our costs for processing and underwriting your loan. And that's basically an estimate of how much we think that we're going to run into for cost to get everything from start to finish, from the time we start working with you, the end when you're closing your loan. And so those fees are set there so that we can kind of have an estimate of being able to provide that level of service to client. But the difference in lenders, and a lot of people don't know this, is we make money on the margin that the rate is offered at.
Right.
So
Commission, essentially.
if someone is offering you a half a point higher than what we're offering today, it's because their margin is higher. It's not necessarily that has anything to do with fees. I think most of the processing and underwriting fees are pretty consistent. Some are lower than others. I recommend that clients shop and look at different deals from different lenders. Like, just don't accept one person's cost opinion. If you this is one of the largest financial transactions that people are going to be a part of. So it's important that you do your homework and that you shop, and don't just go with the first person that you're referred to go to, because oftentimes that person might be making more money on the loan, which is going to ultimately impact your rate. And you're paying that not one time, but every month that you write that check for your mortgage, you're paying for that. So it's beyond the one-time fees that I think people need to take into consideration. I think the more important piece is, you know, how much is their actual rate and APR in comparison to what other lenders are charging them.
Right. A lot of people don't think about shopping for a mortgage. They don't realize that a quarter of a point over 30 years can be tens of thousands of dollars. Correct me if I'm wrong.
You're correct. And I think it's important to say that in no situation on any day would I shy away from a client calling another lender for a quote. Not only because I'm confident that we're very competitive and we take care of our clients, but also because the level of service that we provide. So I feel like that's something else that people need to take into consideration. You know, are they able to get a hold of the person that they need to talk to when they need to talk to them? Is that person available for them on Saturday and Sunday when they're out shopping for a house? So those are all things that someone should be shopping for before they lock in and provide their life story and everything minus their blood type in order to get the loan done.
I totally hear you. Customer service is extremely important. I dealt with that with a lender not too long ago where they had a very, very competitive rate. So my clients decided to go with them, but their customer service was not all that great. So, you know, that's the reason why I'm doing the channel of Where's My Money Wednesday and Find Me the Money Friday, is because I want to get in your guys' brains, learn from you. I'm sure you guys might pick up a thing or two from me coming from the real estate side of things. And a lot of prospective home buyers out there don't necessarily know what questions to ask you guys as loan officers. So I really hope that this is very helpful to anyone that's watching this out here. Melanie, I want to thank you again so much for being on the show. My name is Brock Chapman, associate broker with Signature Home Sales. I do free staging, targeted Facebook marketing, and I don't charge admin and broker fees like most of the other agents out there do. And I think that's it. Thank you so much for being on the show, and hopefully we get a chance to work together sometime.
Thank you very much for having me.
All righty. See ya.